Hello, everyone. My name is Michael, and welcome to how I invest my money as a 20-year-old college student. I'm going to share with you my 5 principles for investing that I follow on every single one of my investments. So let's get started. So the first principle is value. Is the stock over or undervalued? I don't want to buy a stock that's overvalued. And when I look at value of a stock, I like to look at the forward PE ratio, the current PE ratio, price to book ratio, the potential growth for the company. I like to understand where the company is now and where it's heading. And, does the stock price reflect where it's going or where it's at currently? Because sometimes stock prices like to, already price in good news for the next year. And if something minor, that a minor setback occurs, that price could just get killed. So I like to make sure that when I, buy a stock, it is not something that's just going to drop 20% because, there was a bunch of momentum that pushed the stock price up and made it wildly overvalued. My second principle of investing is long term. Is the company going to make sense? Is the company going to be relevant in 5 years, 10 years, 20 years, 30 years, way down the line? It, is it going to be still a profitable business model in an industry that's still going to be around, right? So I want to make sure that this company isn't just going to be, you know, losing, and it's going to be making money for the next few years, but then start losing money, taper off, lose market share for whatever type of company it is. I want to make sure this company makes practical sense. When I think of a company that is going to be relevant for years, I think of like a Procter and Gamble, right? I like to compare companies to that. Is it going to be able to last as long as it has and continue even slowly to grow over time, grow revenue, grow EPS, and it's hard to find a lot of companies. There's always lots of uncertainty and doubt in companies, but you want to make sure that this company at least 5 to 10 years, right? You can make a trade over 5 to 10 years, but ideally you want to hold on to something because if it's a good company, the price is going to go up. So the third principle that I follow is understanding. So do I understand what the industry the stock is in? And I'm not saying I need to be an expert on the field, but do I understand what a company like ExxonMobil is going to do in the future? Do I understand what, like a Tesla, what they're going at? I want to understand what they want to do and what they're trying to achieve in their industry. And I don't need to be an expert on this. I just want to have a basic overlook of, what's going on, the risk involved with it, and the, potential upside. Does the risk is the risk higher than the upside? That's what I like to look at. If the risk is higher than the upside, I don't want the company. I want the upside to be much higher than the risk, right? And it's hard to balance risk and upside because people kind of see it as this, they go hand in hand, but they don't really have to. A company that has a strong future, there's always going to be risk, but there's not as much risk as a lot of people like to make it out to be. There's great money companies that right now that are losing money, but they're not going to be losing money forever. And I think in the market that we're heading towards at this time, and people just these money losing companies that have a path to profitability, because a lot of them don't, but if they have a path to profitability, they're great companies. So I like to understand how they're going to achieve, the next level of growth. So the fourth principle is risk, right? And risk goes with long term and understanding. But I don't mind taking on risk. I invest in companies, and I'll make a whole other video about my portfolio. But I like to invest in companies that have upside potential, but without risk involved. I think it's about 30% of my portfolio is companies that don't make money yet. But in the next year, they'll start making money. 2 years, they're growing very quickly, and they're doing great in their industries. They're doing groundbreaking, and they're entering new markets that really don't exist that much yet. And I understand the risk involved, especially in a market like this where they're not making money yet. And because they're not making money yet, people are scared of it. But in a year or two, when these companies start making money, and they're very close to them. Like think of like a Tattooed Chef, right? Tattooed Chef's a great company. They're growing very quickly, but people don't like it because it's not making money, and they don't think it's gonna make money. But when you're growing that quickly, and I think the analysts are underestimating the potential of this company, and when they do that, that gives more upside potential, right? And that fits into maybe there is less risk involved the lower the stock price gets. So I didn't want to buy it at the all-time high, but when you give me at $11, I mean, come on, that's a great deal. And you just keep dollar cost averaging in over time, and these companies that have high risk really don't have high risk. But I'm not going to put my money into GameStop or AMC, right? I understand, short squeeze, that movement, I love it, right? But I'm not going to put my money into stocks that move just on momentum because those are very risky plays, and that's too risky for me. So the fifth and probably the most important principle for me in investing is high conviction. I need to believe in what the company is doing. I don't want to invest in a company that I don't believe in, right? I think that just kind of goes without saying. I invest in a company because I think in 10 years or from now, all right, I can put my name behind it. I can tell people and be proud that I invest in this company. And it's hard to do because you hear, unethical situations with large corporations and people, especially my age in college, they have a hate for large corporations, but I really don't think they know what they're talking about, right? But I want to avoid these companies that might actually be doing these. I mean, there are bad companies, and I don't want any part of those. I want the companies that are trying to do something good, and they're going to reward their shareholders for it. And I think you can find a good balance of these companies that they're trying to make a difference, and they're going to, and they're just growing and growing and growing. Growth is very important. You can put growth, I mean, along with any of these categories, but I want to believe what the company is doing. My biggest holding is a company called Fisker, and their goal is to have completely environmentally sustainable cars, from the manufacturing process to the charging, and they're doing lots of really cool stuff. And this is probably like, the most risky investment I have. And I mean, it is risky because they haven't put out a car yet, and they have, their expectations for delivery in November. So we'll see. I'll go more into them, but I have high conviction in this company. I believe what they're trying to do is going to benefit the buyers of this, the cars and the shareholders in the long term. And that's what really want when I invest in a stock, is I want to believe. And there's some stocks, like dividend stocks especially, it's hard to believe, right? But there's nothing wrong with holding dividend stocks as long as you have high conviction that the dividend payout is going to continue to increase. There's different types of conviction. You can have conviction in the company, you can have conviction in the fundamentals of the company, and both are very important to have. And as long as you understand that, you know the risk can play either way, you can make a great investment based off of the fundamentals of the company and where it's going. You just got to believe. You can pick one or the other to believe in, but you have to believe in something, right? Or else there's no point of making the investment, right? So belief is a very important part for me. Having high conviction in these stocks is very important for me, and I really do not like investing in companies that I don't believe in, right? And I think that just makes sense. All right, so I hope you guys enjoyed my 5 principles of investing: value, conviction, understanding risk, understanding the long-term futures, and the understanding of what the company is trying to achieve. I think these are very important, kind of rules to just kind of guide your investment. These could change for me. I'm a 20-year-old student in college studying economics, right? These could change for me, tomorrow, right? I don't know what's going to happen, but right now these are what I believe in, and this is how I base my investments. And I'm trying to prepare myself for all markets: a market with heavy growth and a market with heavy decline in growth, where maybe there's a decline in the market, like where there's all these talks about a recession right now, and I want to be prepared if the recession comes or not. So I think it's really important that if you can follow these 5 principles, you can really prepare your portfolio, like an all-weather portfolio. You hear that a lot, and they say they have a mix of gold and bonds. I'm not messing with that. I think my portfolio right now is like 80% stocks and then 20% cash. I'm cash heavy because I want to be able to buy any potential dips, right? So I've just been hoarding cash. I've been waiting, and I don't think that's a problem at all. I think it's important to be, all in the market when you can. And so I will be all in. I just want to be able to buy, buy, buy. I don't really have a steady income stream right now because I'm just a student, right? But I think it's important to be able to take advantage of opportunities. And that's another important. You can add that as the 6th principle: is always be ready to to take advantage of opportunities. And I think people overlook that in the stock market when they go all in. I think it's always good to have a little bit of cash on the sideline, because inflation isn't going to eat away if you don't spend at it, right? And I think that's a big concern of people right now, is inflation, and I understand it. But you have to be able to make the moves that you want when you want. And so, I think it's always important to follow my 5 principles of investing, as I've mentioned, and always be ready to make a move. And that's kind of how I invest. I make sure that I'm ready for, quick swings in the market. I'm not a stranger to making trades. I don't love it, but sometimes you can make a quick buck off of it. But every piece of research shows that long-term investing is the best form of investing, and that's what I'm here for. You got to be in for the long haul, because if you're not in for the long haul with the ups and downs, then you'll stress yourself out way too much, and nobody wants that. All right, so thank you guys so much for watching. If you enjoyed, make sure to like and subscribe. I'll have lots more content. I'll try to have 2 videos, maybe 3 videos a week. I'm, a busy schedule with school, but my next video, I'm going to talk about what's in my portfolio and break it down for you, the percentages, and how why I invest in each company that I do. So if you guys want to see that, again, hit the like, subscribe button, and I cannot wait, to start making more videos. I have a lot I want to talk about, and if you want to hear anything, let me know. I'm going to have my link to my Public portfolio. This isn't sponsored at all, but Public is a great platform for, investing in social media, and I do a lot of posting on there. So you guys check it out on the link below. Thank you for watching. I'll see you in the next one.